This is Martin Wong here from Traders Review, and today the tutorial I've been told is how to add in ATR to my chart. Now, for you, those of you who don't know, ATR is one of the most powerful trading stocks that we use, and it is something that we actually teach you in our Master the Market main course, which we do in June and December every year. We only do this course twice, and in this main course, we will give you this formula, which is the average true range, which is used to manage your trade position as the market goes higher. That's the whole point about it. The point about using ATR is actually make sure that should the market move against you, you have taken the money out from the table. It's like when you are going up to the ting and do a bit of gambling. When you are winning, right, what do? Take some money out from the table. So the ATR stop, or average true range stop, is actually a trailing stop loss. It's a very dynamic stop loss. We actually use it to manage our position, and what I'm going to do now is actually do it now it's actually I have written the ATR stop on the MetaStock, so you must have a MetaStock and the ATR installed in your PC. In most cases, if you come for the main course, I would install the ATR indicator stop loss for you, so you can actually use it. Now, what you want to do is you scroll right to the middle here, like somewhere 2/3 of the middle from your drop down box, as you can see, and look for advanced, advanced ATR stop. There you go, advanced ATR stop. Make sure you have it. Now, also pay notice when you put the advanced ATR stop, your icon has turned into a hand. Notice that, and this is arrow. This is a hand. This is an arrow. This is a, make sure it turns it and then hit on it. So when you finish, you have to drop it. Okay, you have to drop it to the day that you enter. Now that's a caveat. Most of the time, you may use this on the day that you purchase. So on the day that you purchase, for example, now when I'm doing this tutorial webinar is on September. So if you drop it now, can the ATR plot it? For example, let me just show you. Okay, this is how it looks like. Okay, this is how it looks. So the ATR is like a line drawn in the sand. So should the market mark below it, you exit. Okay, you exit. Now this ATR is designed based on what has happened on the left-hand side of the chart. Okay, let me just repeat that. It is designed based on what has happened, because ATR, in my opinion, is not a forecasting tool nor used to do some sort of projection in there. What it does is look back at the volatility of the past so-called 6 months, 6 weeks, 6 days kind of thing, and then make a projection. So what it does is actually helps you to trail your stocks as you go higher. So if you put the ATR stop on the right hand side as it is, now remember, we don't know what is going to be happening on the right side of the chart. So that's why the ATR stop will not be plotted on the right side of the chart. You have to put it on the back. Now, for example, if this happened now, you bought Genting at today's price $9.50, $9.84, and the date you have to know is September 8th, 2011. Now, for argument's sake, what we're going to do is to plot the chart. Now, we probably on the 13th of August 2010. Why we did this? Because there was an 18 line change here, market breakout, and you see ultra high volume finally coming in. That's in August, the breakout. So that's the date. Assume that we enter on the 13th of August 2011. So what we do, we make sure we have this and drop it down to the right. Now you notice, if you drop it down, you'll notice, the line change color. Okay, it changed to a purple color. And then notice the arrow has also turned to a wiggly sign. And that's very important to make sure it is highlighted. Okay, now you drop it in there. The date will be the date that you enter into the market, date or position that you have taken place. So in this case, it will be 13th of August. Okay, and the market defaulted to the ATR unit of 2.5. Okay, now just for some readability to the simplify the whole thing, for short term we use something from 2 to 2.5 ATR to 3. For the longer term we're using 3.5 to 4 ATR. Now if you want to go into the units, that will be another tutorial at itself. So I'm just going to summarize that. Now if you're looking at Genting and you use this as a 4 trade for longer term, I would recommend you use a 4 unit size of the ATR. In this case, you put a 4 here, 4.0, hit enter. There you go. So what you do, you want to make this line thicker, you can click on it, highlight it. If it's highlighted, you can see this is on the red square box here, and change the arrow right below here. There you go. So what it simply means, as long as the chart or the candle are above the red line here, you stay with the trade. You stay with it, because we have noticed a lot of people, when they buy Genting and Genting goes up by 10 cents or 20 cents, they immediately take profit because they felt good. I'm in profit. I don't want to lose any more money there. But guess what? The market is a very interesting. He always tells us to really let our profit run. So as you can see, we have probably got in around 8 ringgit 20 cents here, and we run our profit, and then finally up here when the market hit $12 in here. Now remember, we can never get the top, we get the bottom. The whole point is to get portion of the stages or portion of the market run in here. In this case, the market break below, we probably had got out around 11 ringgit or $11.60 instead of letting the market come back down to 11.60. So that's what I mean. Now what I'm going to do in the next example in here is to change the date. As you can see, this date here, probably I'll use the date of enter, will be the 7th of September. Okay, I'll change this to 7th of September. I'll go click it again. I'll delete that away. Okay, I'll drop it. Okay, 7th of September 2011, and we probably use ATR Stop on 4. Okay, now it's very important now in this example, the scaling option. This is important, you put the scaling option. There is 4 options in here. Really make sure that you merge with the scale on the right hand side. Merge the scale. You see what happens is MetaStock will need the user, in this case that's you, to determine which scale to look at. Right? You don't want it to display a new scale. If you do that, what happens is it's going to be out of scale. When it's going to be out of scale, you only have one scale in MetaStock, which is on the right hand side here. So what you want to do, you want to merge the ATR stop loss or trailing stop to the same scale that you have in this case for Genting, which is on the right hand side. So you want to click on merge with scale on the right and ignore those at the top and the one at the bottom. So you just click on it. As you can see, you see this red dot here? That's the red dot. That's correct. Now, as the day progresses, as this chart is drawn on the right hand side, this red light here will get bigger and thicker and thicker and thicker, just like what we had. Yeah. So this is how the ATR stop loss or trailing stops are calculated. It is calculated as the chart or the bars are added to the right side of the stop. So when you have the stop moving to the right side, the lines will be drawn. That's all I have for the ATR Stop tutorial, and I hope to see you in our main course. Come along and we'll show you how to run your profit and keep your winners and cut your losses. Thanks a lot for listening. This is Martin Wong from Traders Truth Review signing off.